Earnings season is, as you may have noticed, kicking off, and markets reporter Sheila Dharmarajan has been keeping a score of estimate revisions during the quarter, and she tells us why transportation stocks might be on a dead-end road. Sheila?
Hi, Matt. The earnings read for stocks in the transportation sector has not been a pretty picture this quarter. We looked at estimates on a week-by-week basis for the S&P, and 9 out of 10 names in the transportation sector had their earning estimates cut by analysts. On average, estimates came down over 20% over the past 3 months. And the biggest issue for these companies is volume. The American Association of Railroads produces a weekly volume report that has been nothing short of depressing. Looking at the quarter, volumes for eastern railroads have been down almost 24%, and for western railroads down almost 19%. Now, the most important freight load factor is coal, and coal volumes have really taken a beating. For the East Coast rails, they're down 22%, mild weather in the Northeast really having a big impact. And for West Coast rails, fared a little bit better, but still down 6%.
All right, so tough ride for those stocks, Sheila. Is there any light, though, at the end of the tunnel for transportation stocks?
There might be a little bit of a glimmer of hope, Matt. You know, we're going to have to wait until next year, though. Dahlman Rose published their second quarter rail shipper survey report today and said railroad shippers expect to grow approximately 4% for the next year. Now, this is versus last quarter's response of a minus 1% decline. So some optimism for the future. But on the other hand, Expeditors International, which was part of this group of stocks we looked at, took a hit after pre-announcing their second quarter this morning. Even with all the downward revisions, it just wasn't enough, and they came in still below consensus.
All right, Sheila, thanks very much for that. I want to get